Hey everyone, welcome back to this YouTube channel. I hope you all had a great weekend. Today I got something special for you. We'll be doing a trade recap of the long I took on EURUSD on Friday. Now this trade was sent out to the signals group. However, the idea itself actually came off the DXY and not EURUSD. And I'm going to show you how I came up with the idea right from the start. Just before we get going, definitely subscribe if you already haven't. And you're going to want to stay right to the end. Reason being is I'm not only going to show you how I got in using the DXY, I'm going to show you how I knew where to close the trade based on what the DXY did and how I used the DXY itself for trade management to help me secure more profits long run. So to truly understand everything that went on, we're going to go to the 1 hour time frame and 2 seconds, guys. I believe it's interval. Here we go. Okay. So the first thing I'm going to do is turn on session breaks, guys. And the reason for that is so I can show you exactly where the liquidity was taken out and how we use it for our trade idea. All right, so the session breaks separate our sessions each day. One thing I want to mention is the DXY on the right. I inverted the chart and candle colors itself. It's Option I on Mac if you want to invert the chart. I don't know what it is on Windows. Maybe it's Alt I or Command I. Anyway, Control I, my bad. So I want you to notice right off the bat that the previous day here, EURUSD actually never took out this low. So if we look at the same chart on DXY, EURUSD took out the low. And for those of you that didn't invert the chart, it would be the high. But just to keep things simple and make it easy to compare, we'll just keep everything inverted on the DXY side. So the first thing I want you guys to understand is this is not only a liquidity point, this is a divergence itself. And basically what that means is there's a good probability that this area here, when mitigated, will produce a reaction, and we will basically target the opposite side's high. So to show you what that looks like, the trade idea itself is telling us that the last liquidity that matters that was swept was done so on the DXY. So you can see on the previous day when CPI got released, CPI didn't run the daily low or the daily high. However, DXY did. So in this case, what we're looking for is buys, and what we're looking to do is essentially, since we took out the previous day's low, we're looking to take out the previous day's high. With that being said, one thing to keep in mind is one of the ways to use the DXY is understand that Euro makes up 59% of the basket. So once you understand that, you would understand that DXY itself actually drives the pair, not the other way around. So even though Euro makes up most of the basket, if DXY does something, Euro doesn't have to, and it will still react. All right. So we'll turn the session breaks off, and now we can get into how the thought process came down. So all in all, I am wanting to see a reaction from this level itself. I don't care where the reaction comes from within this level, and we definitely don't want to take the initial reaction either, because statistically initial reactions get swept at least 50% of the time. So what we have here is the PPI news release. So we're actually just going to wait for that news release to happen before we even consider a trade. One reason being is if this news comes out really leaning towards one side or the other, it can actually change our whole bias. So with that in mind, all right, so what you have here now is the news release. And what I want you to know about this news release is the forecast didn't get met. So this actually came out worse than expected. So this is telling us that the dollar's got some weakness with this news release, which is in line with the buys we're already looking for. So that kind of confirms that we are indeed going up and we are aiming for the daily high. However, I will show you in a sec how it actually played out when it comes to management. And this one little trick can save you guys a lot of struggles and a lot of extra losses you don't need to take. So now that we're looking for our entry, the range itself just needs to be below 50. We got our below 50. Again, we're not going to take the initial reaction. We're just going to leave price and we're just going to let it run. And now price is running. We have two levels that we want to see reactions from. The first is that one. The second is that one. Just by the way, price is running healthy and efficiently. Just judging on the first mitigation not being too deep, my expectation is that this one would hold. If it doesn't and I take a loss, I would be willing to take one more loss here. With that being said, once again, we're not just going to wait for the sweep. We're actually going to wait for a confirmation. So price taps in. This is exactly where we're wanting to buy from. And now all I need is something to show me that price is willing to continue up. So if we look here, price is 3 bullish candles out, and each candle is actually reaching higher. When the wicks are going in one direction, these aren't rejections to me. This is actually reaching. Rejections come from the edges of the range. Reaching happens in the middle of the range. So if we look at what's going on here, this would be considered the middle of the range. So that is not a rejection. The closes are all bullish. We can market execute this. We can market execute this. And what we want to do is cover this plus half a pip or so. The point of invalidation is this low itself. Now, when it comes to management, we want to aim for this high, but there's something you guys need to realize. If we just look at the way the market's been this whole week, for the majority of the moves that have happened in New York session, unless you were trading news, you likely did not get more than a 20 pip move, maybe 25. And we can tell that the ranges are all small because they're all moving sideways. You're not getting any moves like that where you can hold for 50, 60, 70 pips. So with that information in mind, what we're going to want to do is manage aggressively. So how do we manage more aggressively? We select our take profit, which is up here. For those of you that want to be safer, yes, you can take a little bit bigger of a stop. And this could be a bit of a tight stop for some, but I was willing to take a loss there if need be. And that being said, I just kind of want to show you what the DXY version looked like. So this obviously runs to TP. That's not the thing I need you guys to be concerned about. What I need you to be concerned about is where DXY hit TP. Because when DXY takes the previous day's high out, that's actually our signal to close the trade. So in our case, at 6:38 my time is when the trade actually has to be closed. And what I do is I keep both of these charts open when it comes to management. So as soon as 6:38 happens, essentially that's the candle that I will close the trade on. Now, a lot of you are probably thinking, well, I could hold longer. Absolutely, you could. I've been managing with DXY for quite a while now, and what I can tell you is DXY will stop price dead in its tracks and completely reverse it, and you'll look at EURUSD and be like, we didn't actually hit anything. Why did price reverse? Just to show you what happens here, to solidify what I'm saying, price goes a little bit higher. So you can see DXY took this high, Euro doesn't reach it, and then price just melts. So if you would have wanted to be greedy and hold to this point, you would have ended up with a break even or a loss, depending how you manage. I've seen this play out enough times to know that if DXY does it, it lowers the probabilities of Euro doing it. That doesn't mean this is going to happen every time. Another day Euro might do this. I just know that over a couple of years of live analyzation and a few years of backtesting data, I've seen this play out a lot, especially now that you can backtest two different pairs together on FX Replay. I've tested the concept quite a bit more. So DXY not only used to create trade ideas, I use it for management as well. For those of you that, are wondering how you would have traded this without DXY, you would have just been conservative and said at the very most, I'm going to Asia highs, that's the nearest liquidity, or even be more conservative and take out the London highs, in which case you also expect a reaction. However, when we take out a daily liquidity in a liquidity market, more often than not, we're going to target the other daily on the other side. However, this little trick nobody wants to teach. They either don't use it or they don't know it. And that is one of my secrets I personally use in trading, the DXY. So for those of you that have followed me for a long time and you're wondering how I've gotten some of the trades that I've gotten that make no sense on EURUSD, it's because some of the liquidity levels and the trade ideas and the management ideas are all coming off the DXY. Does it work every time? No. Does it work often enough that you should definitely consider learning how to use the DXY? I 100% believe that if you trade a liquidity style of trading or an algo style of trading of any kind, you should definitely learn how to use the DXY properly. So yeah, I hope you guys enjoyed this video, and I will catch you in the next one.